Hello, and thank you for joining me for our Real Estate Opportunity Fund investment overview. There are a myriad of benefits for investors to invest in multifamily. Just to name a few, the ability to create passive income, return of capital events that occur from loan proceed distributions, refinancing property, above market returns, as well as there are significant tax advantages. There are many other benefits in addition to these, but these are kind of the top four. One thing, if you could please note, there's a QR code in the upper left-hand corner you're going to see throughout this presentation. Feel free to click on that with your camera, and you can go to our website, investwithdmi.com, and you can request access to our investor portal to have an opportunity to look at and evaluate investments you may want to do, including this opportunity here. This is just a disclaimer. In addition to this recorded version, we'll also provide you the slide deck, so I'm not going to read through this word by word. Basically, this is not an offer to sell. Any investments have to be done through being accepted as a qualified investor and through a private placement offering. You would do that through requesting access through our investor portal, and you would have access to the private placement offer documents there. Just a little bit about us. The Real Estate Opportunity Fund, Roman numeral II, is really in place to generate above market returns comprised of both current income, meaning to develop cash flow, passive income, return of capital events from loan proceed distributions. Those generally will occur within the first 2 to 3 years. And then long-term capital appreciation with a sale. And generally, we have about a 5 to 6 year investment time horizon with low to moderate volatility and low correlation to the broader markets. This fund will target investments in multifamily properties only, and primarily we're focused on 100 units or greater. We're looking for investment opportunities with strong market fundamentals, above market returns. We will be using bank financing to minimize the capital outlay and maximize investment returns. And the company is a limited liability company formed here in Texas and managed by DMI REOF LLC, which we'll cover in a moment. So the management entity for the Real Estate Opportunity Fund is DMI REOF LLC. So this company is the manager. The DMI REOF LLC is managed by myself, Eric Mattingly, and is an affiliated entity of DMI Holdings. DMI Holdings is also managed by myself, as well as my partner, Leon Shasteen. And we're the owners of that entity. That's our parent company. So although this management entity is newly formed, DMI Holdings has been in the business of supporting private real estate business expansion opportunities since 2008. In total, we've done over 100 securities offerings for a broad variety of different asset types, which would include single family, multifamily, commercial, mixed use, condo development, mobile homes, as well as private and hard money lending, in addition to multifamily. My name is Eric Mattingly. I'm the president and founder of DMI Holdings. I've been in the real estate and private capital industry for a little over 20 years. I've been involved in structuring a little over $1.5 billion of investment transactions. And we created a workshop for our investors called the Wealth Building Strategies. If you're part of our professional investor network, we try to send out investment information to help our investors just have a good general overall education on what's going on in the industry. And then my personal passions outside of business is I've been in martial arts all my life. I still train, my kids are all involved. So that's kind of my personal passion. My partner, Leon Shasteen, is a co-owner of DMI. He's born and raised country boy, Texan entrepreneur. He's been involved in the private capital industry also for a little over 20 years. and he's co-owner of DMI Holdings. So since he's been with DMI Holdings, he's capitalized a little over $1 billion in projects, and he's been a partner of mine and an owner of DMI Holdings since 2011. And his personal passions are really a lot of outdoor activities, hunting, shooting, fishing, things like that. And he does a lot of charity and community work to give back to the community. Just a quick overview on DMI's project history. Again, I'm just going to kind of skim through this, but just to give you a background specifically on our multifamily project. So we've done a total of 28 projects totaling almost 6,000 units, Class A, Class B, and Class C properties. Most of the Class A are new construction, but we have done Class A acquisitions. We also have done about 1,600 units for Class B and 2,800 units plus Class C. And this is the geographic areas where we've done our projects. So a lot of projects in Texas, although with the partnerships we have, we will be doing projects in a variety of different other states that we don't currently have projects in. These are projects in order that they were done, from the first one, 2009, all the way through present. A good majority of these older projects have been sold. We still have one active Santa Fe Apartments there, which we've owned since 2012. Again, just kind of continuing on, the majority of these have been sold. And then as we move into kind of more recent times, are going to be more of our active current portfolio. And then with these last four being our most recent, Deer Park, Legacy Point, Alston Arms, as well as Arrow's Edge, which is closing this month. Just some highlights to touch on. So the target properties, investment objectives, and profiles, we're looking to create value on acquisition properties by rehabbing and repositioning multifamily assets acquired at a discount to the stabilized market values. So we're doing value add multifamily acquisitions in addition to certain new construction projects. Objective is to provide cash flow, competitive overall returns, and objective is to preserve, protect, and grow our investors' capital. As I stated earlier, 5 to 7 year investment time horizon. And we're generally going to have leverage in the form of a bank loan on the properties that'll range anywhere from 60% on the low end to 75% of the property's purchase price. So we try not to be over leveraged and maintain a good equity position in the property. So the investment process, this is a fund versus a direct investment into a multifamily property. So this would allow investors to diversify their capital across, several projects instead of investing in one at a time. So the Real Estate Opportunity Fund II works with multifamily operators that identify, conduct due diligence, perform underwriting, secure third-party property management, and act as the asset manager for each multifamily investment property. Investors will invest in the Real Estate Opportunity Fund. Then the Real Estate Opportunity Fund will invest in stabilized value add multifamily acquisition properties and certain new construction projects that all are managed with third-party operators as well as management companies. So Real Estate Opportunity Fund II is targeting multifamily properties that have a minimum pro forma investment return on the low end of 10% to 20% is kind of our minimum benchmark we're looking for as an IRR, internal rate of return potential, to fit the model that the fund would invest in. And the last bullet here is just that, it is a fund. So at a minimum, we would invest in 2 properties. This is a $10 million fund. Ideally, we'll have an investment in, probably around 4 projects or so. Some of the benefits are just favorable returns backed by real estate. Investors have an opportunity to invest and obtain fractional ownership in various multifamily properties with the objective to create passive income and capital appreciation. And the projects are structured as equity participation. So they may also offer significant flow-through tax advantages through depreciation and other deductions, just dependent upon how you invest. And then it's also a great hedge against inflation. Some additional benefits is that investors do not provide any personal guarantees for mortgages. Myself and at least one additional general partner will sign and be the guarantor on the loans. Investors' liability is limited only to the investment of capital. So investors, again, you're not on the hook for any of the loan guarantees. We do that. And then investors will receive monthly and/or quarterly updates and financials through our investor portal. That's how we keep you informed of what's going on. The majority of our multifamily properties, we are currently doing monthly reporting. Once a property is completely stabilized and kicking out strong cash flow, we may switch that to quarterly. But in the earlier stages, first couple of years, we do provide those on a monthly basis. And then we're working with experienced third-party professional management teams. The investment is also self-directed IRA qualified, so you can use retirement funds to invest. We're simply limited to 25% of the capital can come from qualified funds. So if we're raising $10 million, 2.5 million of that could come from self-directed IRAs and other types of self-directed plans. And then we're mainly concentrating investments in Texas and the Southeast markets. This next slide is our investment parameters. This is probably one of the more important slides here. So the fund parameters, this is really the box that the fund is going to invest in. We're looking primarily for 100+ unit multifamily properties. We're focusing the acquisitions on value add multifamily properties that are in the B and C class area. And then we also will invest in certain Class A new construction. I'll be showing you a few case studies. We've got some great partnerships, both for acquisitions and new construction. Great track record. We as the sponsors personally invest and have invested heavily with everybody we're currently working with. Our cash flow and internal rate of return objectives is on a cash-on-cash return. This is the distributable cash flow. We're looking for properties that once they're stabilized, will kick out at least a 6 to a 12% or better cash-on-cash return. Looking for the annual averaged IRR on a low of 10 to 20% or greater. If the properties don't, at a bare minimum, fall within that range, then we would pass. Some of these properties can do significantly better than that, but that's our kind of minimum threshold where we would consider an investment. And then an 80 to 100% 5-year total return. And this would be based on cash flow, profit on sale. We're looking to double the investment within a 5 to 6 year period of time. Our return of capital objectives, there are capital events that occur investing in multifamily. So this would occur through either a refinance or supplemental loan. That generally is going to happen within as early as 18 months, but in general, it's between year 2 and 3 that you would go and either refinance the property or do a supplemental loan. Just depends on the financing that's in place at the time. And we wouldn't seek a return of capital event unless we can get a minimum of 25 to 50% of the investor's equity in that property returned. And then the objective would be to either sell within a 5 to 6 year period of time or obtain another loan and return any remaining investor equity in that property back to the investors. And then we could hold it long-term and sell it for a greater appreciated value in the future. We've had some really good success with that. If that scenario occurs, investors' equity position of the property does not change. You still would continue to get your share of cash flow. continued depreciation deductions each year, as well as your share of the ultimate capital gain on sale. And then there are significant tax advantages that go along with multifamily investing. We have some additional resources that we provide to our investors that will explain some of these items we're talking about here in a little bit more detail that we will provide you. But there's a year one cost segregation and bonus depreciation. This is usually 50% or greater in year one. And then there are annual ongoing property depreciation deductions that pass through to the members each year as well. And then the income that's being generated is passive rental income, which also has advantages. So all of these benefits would go to the fund investors. Here are just a couple of case studies. This is broken into two groups. The first group is for our value add acquisitions. And these are 3 case studies. These properties are not owned by the fund. However, these are with operators that the fund will invest with, and these are the property types that we would be investing in, both for acquisitions and new construction. This one here is called Clearbrook Village. Was sold in August 2021, located in Memphis, Tennessee, 144 units, purchased in 2018. The purchase price was $3.3 million and some change. The value increase was $5.8 million. So this was a large value add project, and folks bringing on professional management, increasing the net operating income. The property revenue was increased from $785,000 to a little over $1 million in an 18-month period of time. Rents increased by an average of $139 a month for renovated units, and then the property was ultimately sold 2021 for $9.15 million. So the investors more than doubled their money in a 3-year period of time. Total return in 3 years was 114%. Next property is Pines of Lanier. This is in Gainesville, Georgia, 157 units. This is a highly occupied mid-80s construction project. Net operating income nearly increased 30% in 2.5 years. Property was ultimately sold for $17.8 million. And so basically within a 4-year period of time, investors doubled their money. So it was an average of a 25% annual rate of return. And then the third and final one here was in Dalton, Georgia, 151 unit project. The purchase price was $10.2 million. The actual value increase was $12,832,000. So in a 3-year period of time, this property was sold for $23.1 million. Investors doubled their money in 3 years. These are a few development project case studies. Again, this is with an operator we've been investing with that the fund would do investments with. This was in, these are mainly all going to be in Texas. This one's in Mount Pleasant, 120 units. Construction completed in 2016. They hit 100% occupancy February 2021. Then the property was ultimately sold June 2021. Investors IRR was 28%. 5-year total return was 140% back to the investors. So another one sold in June 2021. Construction was completed January 2019. Lease up completed in June 2019. Occupancy was 98% May 2021 and sold in June of that same year for a value increase of $7,560,000. So investors in 3 years generated a 72% rate of return, which was 24% annual IRR. Next one here was in Palestine, 136 units acquired in 2020, sold in 2021. So this was a little bit shorter term turnaround. Investor returns were 14% internal rate of return, 42% over a 3-year period of time. Then next is just a quick overview on the reporting we provide to investors. Basically, on a monthly basis, at least until the properties are completely stabilized. Investors are going to receive all of the following information every month. The first bullet there is just a property performance summary. It's just basically kind of a quick overview of what's going on with the investment, photos if there's construction going on, any new additions that we're doing on the property. It's just sort of a summary of kind of what's going on with the deal. And then the rest of this information is actually provided by the property management company. Depending upon how many units, this will be anywhere from 80 pages to 200 pages, but it has everything an investor may or may not want to look at, but we provide that to you on a regular basis. And with that, I want to thank you for joining us. Again, if you go to www.investwithdmi.com, you can request access to our investor portal. Also, one of the better ways to reach us, if you have questions or would like to schedule an appointment to talk or get some more information, just email us at invest@dmi-mgt.com. Again, invest@dmi-mgt.com. And we look forward to having an opportunity to work with you. Thank you for your time and reviewing our opportunity.